Hello and good morning. I'm your host, Ed Katashabe from Traders Next Door. This is the Daily Scoop. Now, it would appear that Donald Trump is making good on his word that he is definitely serious about imposing serious tariffs this year. The United States' current debt is sitting at $36 trillion, and their trade deficit with other nations is sitting at $98 billion. And Donald Trump and his administration think that tariffs are a good way to try and close that gap. You see, tariffs are a type of tax, and taxes are used to raise governmental funds. But what most people don't really clock is that tariffs are ultimately paid by consumers. You see, the way tariffs work is any tariff that's imposed on a certain country ultimately falls on whoever is buying those goods from that country. So if an American country wants to buy goods from China, that 10% tariff is ultimately paid by the company. That company is then going to, in a bid to offset their costs, pass off that cost onto its consumers. Now, the reason why that's an issue is this is a inflationary measure. Tariffs ultimately do raise inflation, and with CPI coming out hot across the board, it would appear that right now the US inflation is looking a little bit sticky. CPI year on year came out at 3%. Now, this is way higher than Jerome Powell and the Fed's target of 2%. It seems like they are slowly struggling to get to that 2% tick. So with inflation looking as sticky as it is, this is going to limit Donald Trump's ability to impose more tariffs, or at least the type of tariffs that he has been planning to do. Donald Trump went on the record saying a couple months ago that he was looking at imposing as much as 100% tariffs on goods, but it's looking like with inflation the way it is and the current state of consumer spending and consumer buying power, that he is going to be unable to really dial in on that. Now, Donald Trump has already imposed a 10% tariff on China, which is not outrageous, but is significant enough to affect prices for consumers. Aluminum is one of the primary imports that the U.S. gets from China, and right now that 10% tariff is looking like it could increase consumer prices by 0.5 to 1.5% on all aluminum goods. This goes down to motor vehicles, it goes down to aluminum canned goods. So there is going to be a significant feeling in US consumer pockets on this. Donald Trump also spoke about looking at doing reciprocal trade tariff agreements with other countries. Now, a reciprocal tariff agreement would be whatever that country's tariffs are on U.S. goods, the U.S. is going to impose the same kind of tariff on them. No more, no less. However, there's still negotiations going on. Now, the market has seen a nice little rally as a result of this news because there's still time for action because the negotiations are still going on, and it's looking like Donald Trump's tariff policies are going to be a lot friendlier than originally proposed. It looks like the market is having a very favorable response to this. Now, this is one of those situations where the sentiment about the news ends up being more important than the news while it's still playing out. The tariffs have not been imposed yet, but the fact that negotiations are on the table is looking really bullish for the markets right now. So there's a lot of speculation happening on exactly what's going to happen, but it is at least looking like Donald Trump is somewhat restricted on how much of those tariffs he can impose. If Donald Trump gets his way, however, the tariffs are going to be a lot higher and consumers are going to feel the squeeze. Donald Trump is essentially playing chicken right now. He's trying to get inflation as high up as he can, raise as much taxes as he can, raise as much tariffs as he can without the U.S. consumers noticing too much. His whole campaign was riding on the fact that he was going to lower costs for the American people. So him putting in policies that are going to increase those costs is contradictory to what he said he was going to do. And if the American people do notice a upswing in costs, that is going to reduce his popularity. It is going to reduce the polling scores. And that is something he's acutely aware of. So right now, it's this game of chicken where he's going to try and uptick things very slowly over time until such a time that they are trying to close that national debt, they are trying to close that trade deficit without the American people getting too up in arms about it. It's going to be very interesting to see how this is going to play out over the next couple of weeks. It is not entirely clear how this is going to affect the markets in the long term, but in the short to medium term, while negotiations are going on, it is looking like the market is going to rally quite a bit. We saw US 30 hitting all-time highs, we saw gold hitting all-time highs. It is speculation that NAS is probably going to follow suit at some point in the future. So right now, a lot of moves are happening in the market as a result of all this news, and it is a very exciting time. As we said earlier on the show, when Donald Trump comes into power, big moves tend to happen, and they tend to happen quickly. So it is time to take advantage of that. You can go ahead and purchase yourself a Vault Funder account. Use the code FISA, F-I-S-A, to get yourself 35% off. Make use of the opportunity that is presented to you right now. When negotiations are done with tariffs right now, some big moves are going to happen as a result, and you do not want to miss out. We will be covering all Donald Trump news and all tariff news on this channel, so be sure to subscribe, like the video, share it with your friends, and come back on Friday for the next episode. I've been Ed Cat. This has been Forex Insights SA, presenting Traders Next Door, and we will see you in the next one.